Okay, very first thing, question number 4A, it was given that the authorized share capital of Tamba Limited is rupees 2 crores divided into 1 lakh 10% preference share of 100 each and 10 lakh equity share of 10 each. Okay, so first I'll just read it and then we'll see what we have to do ahead. 75% of each share were issued to public. 20 rupees per share on 20 on 2000 10% preference share and 4 on 40,000 equity share were not received. The company's reserve and surplus were given GR, PNL, net profit, interim dividend transfer. Prepare notes on share capital and reserve and surplus forming the part of balance sheet of the company. Now, very simple. Okay, first thing they are asking us to prepare the working note on share capital. Now, always remember share capital. The working note is divided in two parts. A part called as authorized capital, B part issued and subscribed. Okay. Now, under authorized capital, it is given that the company has an authorized capital of 2 crores divided into 1 lakh preference share and 10 lakh equity shares. So, with the help of that data, we are going to start the very first part. Okay, share capital particular amount, we give the heading authorized capital 1 lakh 10% preference share of 10 of 100 each, which comes to 1 crore, and 10 lakh equity share of 10 each, which again comes to 1 crore. Total was 2 crores, which was read above. Okay, now issued and subscribed means given that 75% of each class is issued. So out of this 1 lakh preference shares, 75,000 shares are issued of 100 each, so that comes to 75 lakhs. And 10 lakh, 75% is 7 lakh 50,000 of 10, so that is again 75 lakhs. So 75 lakhs each is issued, but 20 rupees into 2,000, that's like 40,000 rupees ka preference shares are in calls in arrears, and 4 into 40,000, that is 1 lakh 60,000 is in call in arrears for equity shares. So now the part B will be issued, subscribed and paid up capital. So it will be 75,000, 10% preference share of 100 each, 75 lakhs as we discussed. Less calls in arrears, that is 20 into 2,000. So that's 40,000. We subtract and we put it outside. Okay. Similarly, 7 lakh 50,000 equity share of 10 each, 75 lakhs, and calls in arrears was 4 into 40,000, which came to 1 lakh 60. We subtracted, we got 73 lakh 40,000. That's it. We add up these two and we get our total share capital ka value. Remember, authorized capital just get total and gets added here. So it doesn't get added further. Okay. So our total comes to 1 crore 48 lakhs. Okay. So this was number one, the note on share capital. Very simple. Now, similarly, we'll have to prepare the next reserve and surplus. Under reserve and surplus, remember, they are giving you general reserves and P&L opening balance. So we have two amounts and then we see where and how the other values will get incorporated. Okay. Chalo. For reserve and surplus, they are giving you opening general reserve is 60 lakhs. P&L ka opening balance is 20 lakhs. Net profit 1 crore 20 lakh gets added to your P&L. Interim dividend will get subtracted from P&L and transfer made to GR will also get subtracted from P&L. So if it is transferred made to GR, meaning from P&L, it will get subtracted and it gets added to your opening balance of GR. Okay, now see how we use it in the format. Okay, so general reserve opening balance is 60 lakhs. We note it down. Transfer from P&L. Okay, they are saying transfer made to GR is 40 lakhs. So from P&L, GR is being getting transferred of 40 lakhs. So transfer from PNL 40 lakh, add up, it becomes 1 crore. Now PNL had an opening balance of 20 lakhs. Net profit of the year, so add net profit 1 crore 20 lakh, less transfer to GR 40 lakhs and less interim dividend paid. So from PNL, your interim dividend gets paid. So we less it. So 20 lakhs plus 1 crore 20 lakhs minus 40 lakhs minus 56 lakhs comes to 44 lakhs. So 1 crore plus 44 becomes 1 crore 44 lakhs. That's your total of reserves and surplus. Okay, so these were the way you all had to make the share capital and the reserve and surplus notes. Okay, so this was question number 4A, costing 8 marks. Now, along with this, there was question number 4B. Let us see now what is that. I hope everyone have understood this. Okay, prepare fixed asset schedule from the following detail. They are giving you particulars. If they are giving you 4 assets: goodwill, land and building, plant and machinery, delivery van. Opening balance is 5 lakhs, 23 lakhs, 5 lakhs 75,000, 50,000. Provision for that is their opening of your depreciation value, nil, 3 lakhs 75 and 20,000. Depreciation is to be provided as land and building 5%, plant and machinery 12%, delivery van 15% on WDV method, that is written down value method. Again, a very simple sum. First thing, you need to make a table having 10 columns. So what we'll do here is, see, this is the entire working, but then I'll just tell you first. Make 10 columns. Okay, first will be asset. Under asset, we'll note down goodwill, land, plant, delivery, and the total. Okay, then we have three main heading: gross, depreciation, and net block. Gross block, depreciation, net block. Under gross block, the heading is opening balance, addition, deduction, closing. In depreciation, we have opening, addition, closing, and net block may we have opening and closing. Okay. Now, in the question, they are giving you the cost. So, as on 1st April 2022, that's the opening balance 5 lakh, 23 lakh, 5 lakh 70, 50,000. There are no additions been made, no deductions been made or given in the question. So, they remain blank. So, whatever is opening, the same will become your closing. Total comes to 34 lakh 25, 34 lakh 25. Okay. Now, under depreciation, the opening balances are given. So now see, goodwill is intangible, so there won't be any depreciation on that. So it's given nil. Land ke liye 3 lakh 75 and 20,000 given directly. Addition meaning current year ka debt. Now current year, let us see how to get it. Okay. First they said is land and building is going to be at 5%. Land and building ka closing balance. Okay. We'll go with the opening one. Okay. The opening balance like is like opening and opening. Okay. Opening was 23 lakhs. From 23 lakhs, okay, you will minus the opening balance of debt, that is 3 lakhs. So 23 lakhs minus 3 lakhs. So your value of your asset is only 20 lakhs. From on the 20 lakh, remove 5%. So 20 lakh into 5% is 1 lakh. 3 plus 1 total is 4 lakhs. Similarly, 5 lakh 75,000 may say we subtract 75,000, so it will become 5 lakhs. 5 lakh into 12% is 60,000. 60 plus 75,000 is 1 lakh 35,000. Again, 50,000 minus 20,000 is 30,000. 30,000 by 15% is 4,500. You add up, we get 24,500. And the total of each. Last step, very simple. Gross opening minus gross debt will give you the opening net. Okay, gross closing minus the debt closing will give you the closing net block. So 5 lakhs minus nothing is 5 lakhs. Again, 5 lakh minus nothing is 5 lakhs. Okay. Similarly, 23 lakhs minus 3 lakhs is 20 lakhs. 23 lakhs and closing. 23 minus 4 is 19. 5 lakh 75 minus 75 is 5 lakhs. 575 minus 135 is 4 lakh 40. 50,000 minus 20 is 30. 50 minus 24,500 is 25,500. And we just need to total it up and we'll get your final answer. This is how you'll need to prepare the schedule for fixed assets. Okay. Very simple. Just have to substitute the values and find the additions in the depth, add up, subtract, and you get your opening and closing net block. Okay. So this was for question 7 mark question number 4B. Okay. Now in option 2, question number 4 in A and 4B, we had a 15-mark full-fledged question which was based on cash flow statement. Okay. So let us see how. I hope everyone have understood this. Okay. So let us see now how to solve the cash flow statement. The question is given as Zim Limited gives you the following balance sheet for the year ending 31st March 21 and 22. Prepare the estimated cash flow for the year 31st March 22. They are giving you liabilities, assets, 21, 22, 21, 20, so like opening, closing. Other informations are given: company paid tax, depreciation was charged, and investment. Now remember, whenever you get cash flow ka sums, the very first step is whatever adjustments are given, prepare a ledger account of all those adjustments. Number one, company paid tax. So we'll prepare one ledger account for tax. So here I can see provision for tax. Opening balance is given, closing balance is given, and income tax paid for the current year is given. So using these three values, we'll make first account provision for tax. It's a liability. So opening balance 40, closing balance 55, and cash paid 45,000. Three things are given, we tally it. Okay, whatever tally karke, whatever difference you will get will be known as to P&L balance, which is 60,500. Very important. Okay, all these values are important because you're going to use these values in the problem sum. Next, land and building and plant and machinery were charged depreciation 12 and 17 respectively. So first we'll do land and building. Opening is 2 lakh 50, closing is 2 lakh 75,000, and depreciation is 12,000. So opening debit asset, closing depreciation, You tally, we get the difference. The difference is known as cash purchases. Amount comes to 3 lakh, I mean 37,000. Similarly, for land and plant and machinery, opening is 3 lakh, closing 370, depreciation is 17. So 3 lakhs, 370, 17. Tally, we get 87,000 as cash purchases. Last investment costing 10 was sold for 12,000. Investment ka opening is 40,000, closing is 50,000. You're selling it for 12,000, making a profit of 2,000. Okay. So now let us see how to make that. Opening is 40,000, closing is 50,000. When you're selling, it's always on the buy side. Difference of profit will come to 2 P&L profit 2,000. Tally it. Difference will go to 2 cash purchases. Amount to 20,000. Okay. So now in this problem, remember a few values. Okay. P&L 60,500 is provision for tax. Cash purchases for land and building 37, for plant and machinery 87, investment 20,000, and P&L profit is 2,000. These are the five important values which you need to remember. 60,500 is for tax, 37,000 for land, 87 for build plant and machinery, 2,000 is the profit on investment, and 20,000 is the cash purchase for investment. Okay. Step number one, whatever adjustments are given, prepare the ledgers for that. Okay. Now, step number two, we will start with the formation of cash flow statement. Okay. Now, cash flow statement will be divided in three segments. Number one will be from cash from operating activity, then from investing activity, and then from financing activity. The most important one is the very first thing, that is from operating activity. So, let us see how to solve that part. Okay. Step number one, cash flow from operating activity. Okay, we always start with net profit. Now, if you look in the sum and the liability side, we don't have P&L account, but then there is reserve. If P&L account is there, we always take the P&L account. If P&L account is not there, then we will take reserves and surplus. It will always be closing minus opening to find out whether there is a profit or a loss. Closing was 1,51,000, opening was 1,69,000. So there is a negative. So basically, there is no profit. You'll start with net loss. Okay, there is a negative 17,500 ka balance in our reserves. Okay, step number one, always start with net profit. That is the difference between closing minus opening of P&L account or reserves and surplus, whatever is given to us. Second, under operating activity, the second part is called as adjust non-cash items. Adjust non-cash meaning those things which has nothing to do with cash. In that, remember, all the expenses are added, all the incomes are less. Those activity which does not pertain to any cash, expenses gets added, income gets subtracted. So which were the expenses? Number one, depreciation. Okay, now these are the few things which you have to remember. They only keep repeating. Okay, first will always be depreciation. It is a non-cash expense. 17 plus 12, that is 29,000. We get added. Goodwill, if you look here carefully, goodwill was 50,000. It became 40,000. So there is a decrease in 10,000. So it is written off like an expense. So any expense which are written off, it's again a kind of a depreciation. Okay, so 10,000 is goodwill. Or anything which is related to PNL. We found tax 60,500. Okay, proposed dividend. Okay, we take the current year ka proposed dividend 40,000. These are again proposed meaning I haven't yet paid. No cash has gone out, but it's an expense that is going to be in future. So added. And profit on sale of investment 2,000 PNL. So that was negative income. So it will be less. So depreciation, goodwill written off, tax provisions, proposed dividend, profit or loss on sale of assets. All these are your non-cash items will can come in our second part. The total came to 1,37,500. We subtracted from net profit. So net profit 17,500 negative and 137,500 will give you 1,20,000. That is operating profit before working capital changes. Since it is before working capital changes, our next heading will be third, adjust working capital changes. Under that two part you make add and less. Add may keep the heading lal. You remember the word lal, L-A-A-L. L-A meaning increase in liability, decrease in asset. A-L will be increase in asset, decrease in liability. This is all for all your current assets and current liability other than cash bank. Okay. So we start from the liability side. Liability may see share capital, reserve, debenture, loan, creditor, dividend, and tax. Creditors is the only liability available outside liability. It was 40,900. It became 50,700. So there's an increase. We always check the difference. There's an increase. So increase in liability will be under the add part. So you write creditors. Only the difference 9,800. From the asset side, goodwill, no, land, no, plant, invest, stock and debtors. These are the two current assets. Stock was 30, it became 40. 10,000 increase in asset comes under the less. So stock 10,000. Debtors was 62,000, became 62. 500 increased by 500, again under less. So 9,800 minus 10,000 minus 500 gives you negative 700. So 1,20,000 minus 700 is 11,000, 1,19,300, which is nothing but cash generated from operations. Less income tax paid, 45,000 will give you your first answer, net cash from operating activities, which is 74,300. Okay. Now 74,300 is a net cash from operating activity. The second part, now this was from operating. Second will be investing. Investment may only the asset, the fixed assets. There was land and building may we found cash purchases. In plant and machinery we found cash purchases. Investment may we found cash purchases. And also we have sold one investment. So four things can appear. Cash flow from investing activity where we have investment sold for 12,000. Land purchase 37,000, machinery purchase 87,000, and investment purchase 20,000. These values are from, I'll just take behind here. These are the values: 37,000, 87,000, 20,000, and you're selling it for 12,000. So these are the four values from your fixed asset which we are going to use. Okay. So 12,000. See, the moment you sell, money is coming in, so add. The moment you purchase, cash is going out, so less. So positive 12,000 minus 37 minus 87 minus 20 will give you minus 32,000 as your net cash from investing activity. Second part. Third, from financing activity, that is related to all your shares, debentures, loan. Okay. So from financing activity, shares were 250, it became 3 lakhs, so it's increased. So we add 50,000 share issued. Debentures 250 became 3 lakhs, so debenture issued 50,000. Loan was 80, became 1 lakh to 20,000 loan taken extra. And last year ka proposed dividend, which was proposed, has to be paid in this year, so 35,000 will be less dividend paid. So 50 plus 50 plus 20, 120 minus 35 is 85. That is net cash from financing activity. We got all the values from the three parts. First part may 74,300 positive. Second may 1,32,000 negative, and then 85,000 positive. So 74,300 minus 132,000 plus 85,000 will give you net increase in cash 27,300 if it's positive. If it would be negative, then it would be net decrease. Okay. To this amount 27,300, we add our opening cash balances 12,000 plus 1,29,900. That is 132,900. When you add up, it comes to 1,60,200, which is nothing but the total of a closing 10,000 plus 150,200. So it comes to 160,200, which means your sum has tallied. With this, the entire sum based on cash flow statement comes to an end. Okay. I hope everyone have understood. You need to follow in the same order and you can solve any sum. Okay. So this were the three questions from question number 4 of the paper. Okay. I hope everyone have understood that. So with this, the entire paper has been solved. All the practical sums have been solved. Okay. So with that, we will be ending this video here. Thank you.